Hello traders, welcome to our Admiral Markets webinar here, 7th of August 2024, where this evening we're going to be talking about how in the UK we are welcoming a new government, but what does that actually mean for UK stock traders? A fascinating subject and happening at a time where we're seeing great change both in the UK but also you might say other Western nations. And so it's an opportunity for us to take a look at with those changes within the UK, how do we go about turning them from a possible threat into a possible opportunity? It's great to have you here. Really pleased to be here to speak to you this evening. Thank you for those of you joining us for this evening. As always, we'd just like to make sure that the technology is working with us rather than against us. So if you're here in the room, if you can confirm that you can hear my voice and you can see the slide, that would be fabulous. That's really, really much appreciated. And then we'll look to begin our session this evening. So, as always, we're operating here in the UK and we will basically start with a quick risk disclaimer, and you can take a moment to just make yourself aware of that, the risk warning there. Just remember, ladies and gentlemen, that trading with margin does involve risk and that ultimately you are responsible for your own trading decisions. And should you have any questions, please either get in touch with your account representative or speak to a responsible person. So, as I said, we're going to talk about how the change in the UK government, how that's going to have an impact on sort of UK stocks. So, what in particular are we going to look at today? Well, we'll have a little conversation about how those recent changes, they are reflected in the UK markets, and we'll talk about, how can UK stock traders, they can use this in their trading strategy? How do they look to sort of find possible opportunity? And then we'll also talk about how you can trade this new environment with Admiral Markets. So there's an awful lot for us to discuss. There's an awful lot for us to cover here today. And if anything, we're a little bit sort of defined by the time we're allowed here. Something we could speak about for hours, days, weeks, even. And there's an awful lot of interesting elements going on within the UK at the moment. It would be interesting to know, of those of you joining us here today and so for our session, how many of you presently trade, long-term trade, or invest in UK stocks? It would be interesting to know what, if any, experience you have. I appreciate that here at Admiral Markets we have a truly global audience of people who join us, but it'd be interesting to know what, if any, specific trading of UK stocks people look to do. And so if you have any experience of that, please put that in the chat box, and I'd be fascinated to hear what others' experience has been. For those of you who don't know me, my name's Paul. I've traded for many years. I've traded for funds, traded for clients. Primarily, I trade a sort of multi-asset across a broad range of instruments. I tend to be a trend trader for my longer-term trading. For my shorter-term trading, I tend to be a reversal trader. Interestingly, both of those elements are included here today in terms of their value when we look at longer-term trading and investing in terms of buying particular shares. So I've lots of experience to help share with you, and I look forward to being able to do that over this next period. So it's interesting. Thank you for letting me know that you can see me and hear me. That's always good. It helps me realize that everybody can hear me. So Ilo said, as he's normally had, he's normally sort of experiences short-term trading and FX. So this is going to be a very different experience for you, Ivalo, and I hope I've pronounced that the name right. If I haven't, I do apologise. As I said, I appreciate we have a truly global audience who come to watch our sessions. What you'll be interested to hear is to see some of the actual usefulness, in terms of the ability to transfer certain concepts and ideas of operating from short-term trading in whether that be FX or indices markets, how that actually can be used in long-term trading and investing in UK stocks in particular. Peter here he says, I trade and I invest. I've been investing for a good few years and overall done quite well out of that. Tend to invest quite a lot for dividends. So thank you for Peter. Thank you for that. Okay, thank you for that insight. And that's interesting. It's fascinating to hear that your particular style of investing looks at focusing on dividends. That's going to be interesting when we start to look at some of the tools that Admiral Markets provide to clients. But thank you for that, Peter. That's much appreciated. So if you are new to trading, or if you're new to Admiral Markets, just to understand who they are, Admiral Markets are a broker with basically UK location. You can read from there that there is actually, they offer a wide range of financial instruments and various asset classes that provide you with the opportunity to both trade and invest, and there is also comprehensive education provided by myself and other individuals. So there is always plenty for you to take on board from working with Admiral Markets. And we also provide regular webinars with live market analysis. Okay, we also have podcasts. We have a premium analytics portal for clients, which is worth being made aware of. We have also an academy platform, and we also have a research terminal that plugs into the Investing MT5, and we will take a look at that later into this evening's session. We also do podcasts, and there are also some excellent written articles on the Admiral's Markets website. So I commend them all to you as a way and means of increasing your knowledge and education. And as I said, not only can they do investing, but they can do trading. And as you can see, that there is a really broad range of instruments that are available to you, and it provides both MT4 and MT5, which are available for download. There's also a mobile app and also a web trader app. So you are well and truly covered in terms of different ways that you can engage with financial markets. But tonight, what we're going to focus more on is, as I said, long-term trading, but also investing. And what we can see here is that when it comes to investing, and certainly with the Admiral Markets UK, well, what you can see is that there are actually over 4,000 available stocks and ETFs that you can choose to engage with. We won't be going through all of them this evening, but there is a huge broad range that you can get involved with. There's also elements like fractional investing, and there's also a mobile app. And we also have, in terms of platforms, the MT5, web trader, okay, and the mobile app. So there is, as I said, a broad range of instruments and a broad range of technology solutions that help provide you with the best way and the best opportunity to engage with markets. And more of that as we go deeper into our session this evening. And those, for those of you who are interested to know more, during 2024, what we've had is seen a progression of new technology, new solutions that are available for clients. As I said, MT4 and MT5. Okay, also a web terminal version, investing calculators, and also I said the research terminal is there and available. So there really is a huge spread of, as I said, technology solutions and investing solutions that allow you to engage with markets with Admiral Markets. So we're here really today, this evening, for our session is to as I said, to talk about, we are welcome to a new government here in the UK, and really, what does that mean for UK stock traders? How can we turn that to our advantage? We are traders and investors, ultimately, and that's what we're looking to do. So, as I said, we have a truly global audience who join us for our sessions. We're always interested to sort of learn some new elements that might help them in terms of, crafting and refining an edge that they have. But here in the UK, on July the 5th, which is really literally only a month ago, the United Kingdom underwent a change of government after 14 years of conservative right-wing rule. A Labour government led by Sir Keir Starmer replaced the Tories, which is a kind of kind of a working name, nickname, derogatory name, depending upon your particular personal viewpoint, as the party in power. And what I should say is that, here, both personally for myself and for Admiral Markets, we're not here to pass judgment on any political elements. That's not for us. All we're doing here is setting the scene. This is about understanding the landscape of what's going on in the UK. As I said, ultimately, we're looking to see how can we turn that into an opportunity for ourselves. So whenever you have a change of government, and it doesn't really matter, what country or what state you might find yourself in, when there is a major change of government after a period of, as I said, 14 years of rule, well, then that shift in the political landscape, it will have knock-on impacts upon the economy and the overall stock market. And so today, we're going to have a look at some of those changes, and in particular, their impact upon UK stock traders. And what I'm going to do also is share some trading ideas and some investing concepts and some simple tools that are available to Admiral Markets UK customers. So, as I said, we can't go into it as deep as we possibly could in the time we have allotted here, because it is a fascinating subject. We can go into deep, but what I want to do is to share a few ideas about changes that may be afoot. How can we sort of turn that into long-term trading and investing ideas that traders and investors could take on board and use, and they're actually quite simple to execute based upon the range of technology solutions that are provided by Admiral Markets UK. So, as I said, lots for us to discuss and cover. So, as I said, we're not here really to sort of pass judgment in terms of political ideas. We're actually just here to look at, how is this going to impact markets? What do I need to know as a trader and investor to best equip me to be able to operate in a new environment? So, what could we expect from the new Labour government? And please, by all means, for those of you joining us here, you may have your own idea, you may have your own particular viewpoints, whether they be right or wrong. That's absolutely fine. I think it all adds to the debate. But understanding, what are we likely to see? Well, are we likely to see more taxes? Well, many people would say that is probably likely to occur based upon the way the Labour government operates, and also based upon the environment they have inherited. If there are more taxes, where will they come and how will they impact people's trading and investment decisions? And I mean that not only as operators in markets, but also for businesses, businesses and individuals. What impact will that have? There will undoubtedly be changes in government policy. And really the question is, well, how will they look? Remember, as I said, we're only 4 weeks or so into their premiership, and here in the UK it's about 5 years, okay, as a general working government, if they based upon the sort of rules of the House of Parliament. But what we'll be looking at, changes of government policy, what, if any, government borrowing will occur, because once again, that has an impact upon the market's confidence in both the government, but in the UK generally, and that then has knock-on impacts into things like GBP sterling, and also the main UK indexes, the FTSE 100, FTSE 250, FTSE 350. Ultimately, regardless of all of this, we're here to see how do I turn that into a possible opportunity. There are never any guarantees. There's never anything that's perfect. It's about how can we find ideas, concepts, spaces that allow us to turn it into an opportunity. So with that in mind, I thought, why don't we have a look at some particular sectors for ideas? As I said, we have, in terms of the index, we have the FTSE 100, FTSE 250, FTSE 350. They are the kind of main UK stock indexes. And I thought what might be an idea is to look at some of the sectors that may see major change over the next couple of months. And in which case, is that an opportunity for us? Okay, is that an opportunity for us as a long-term trader and as an investor in UK stocks? So I thought, let's have a little look at a few ideas. But first, before we dig into that, I just want to set the scene, so that we can clear about the expectations of how we can work together and going through in our session this evening. So, as I said, looking at what Admiral Markets can offer you, well, as I said, they can offer the UK FTSE stocks to trade. They will also offer access to UK ETFs, exchange-traded funds. But I just want to make it clear that whilst there is a broad range of UK-based ETFs, they are not all UK-focused. Some of them will be focused on the UK in particular, but some of them might be UK-based ETFs, but they might be focused on looking at things like emerging markets or America, okay, or the S&P 500 or global technology, etc. So they'd be based in the UK, but they're not looking at the UK, and I hope that means that. So, whilst you have access to those, just remember not all of them are UK-focused. You also have access, as I said, to the research terminal, which is available to download into your MT5. Very simple. We'll put a little slide up in a moment or two to show you how to do that. I have to also say that to help with this, the London Stock Exchange itself has a very useful website, has some really useful parts of it in terms of the overall index, but also looking at the individual stocks that make up the FTSE 100. And so I would suggest making yourself available, taking a look at that, because it will help you in terms of building a picture, okay, of the health and the wealth of the UK economy and the FTSE 100. And as I said, there's some great details that can help support you in your decision-making frameworks. Also, before we dig into the sort of exact data and the exact elements we can talk about, I think it's always worth, whenever we're engaging in some trading investing, let's set some rules and expectations, okay, that are call it like our fundamentals, our own baseline of how we'd operate. So, as always, and for those of you who joined me for many of the webinars over the years, you will have heard me talk all the time about how risk management is absolutely key. And it doesn't matter whether you are short-term trading, 1-minute charts on the NASDAQ, or whether you're taking longer-term investing decisions, okay, on UK stocks. Risk management is absolutely key, okay? Always understand it and always honor it. It's important, okay, to know what news is coming out for that week ahead when you're looking to make any kind of investment decisions, and I'll show how the research terminal can help you with that as a moment when we switch across to the live charts. What I've also found, okay, and what I try to get across as message is that it's generally better to conduct your analysis before making trading or investing decisions. Conduct your analysis separately, okay? So for me, I like to do most of my analysis. I'd say probably 80% of my analysis gets done at the weekend when markets are closed. I sort of give myself a 90-minute window, keep myself, close the door, okay, don't answer the phone, and just sit and focus on doing my analysis, so that during the week I'm in a position just to make decisions. And I find that has worked best for myself, okay? And there's lots of reasons for that, and that in itself is a webinar all of its own. But it's just sharing with you experience from my many years. It might sound very simple, but always make sure you've got a good internet connection, okay? We often take it for granted, but it's undoubtedly important when you're trying to make sure that you're getting orders onto a system. Not unsurprisingly, make sure you're rested and prepared, okay, for the session that you're looking to work through, okay? It's unbelievably important, all right? When you're in a good place, you tend to make better decisions, and when better decisions, you tend to get better outcomes, okay? And just remember that, okay, for this, okay, when we're looking at long-term trading and investing, we're looking to be long-only buyers. So, in my trading life, okay, my short-term trading life, okay, I love to short markets, okay, and that's great. But when I'm here, okay, operating as an investor, okay, or a very long-term trader in UK stocks, I have to recognize that I am a long-only buyer, and that has to come into the way I make my particular decisions. So, as I said, that's just always about setting rules, expectations, and good standards to work forward from. Now, of course, I appreciate that said not only do we have a truly global audience, okay, who enjoy watching our sessions, but also we have a broad range of experience. There will be people watching this session who have been traders and investors for many years. There'll be other people who are right at the start of their trading and investing journey, and you're all very welcome. And there's always something for everybody to learn from our sessions. So, as you can see here, with an investing account from Admiral Markets, you can buy, okay, all of the UK shares mentioned in this webinar. And in order to get started, just follow these steps, okay? You can open an Invest MT5 account, log in to your dashboard, okay, on the Admiral Markets website. You can either open the web trading platform if you wish to operate out of the browser, or if you have a Mac or if you have a laptop PC, you can download the MetaTrader 5 platform, and within that you can search for UK shares and click the symbol to open a price chart in which you can create a new order, enter the volume you wish to access, and click to buy to send the order to market. And you'll find that, as I said, going into the dashboard will help you with that. And there are also support days in terms of support desks, and also a huge plethora of information to help you with actually doing that, actually following through that particular process. So let's start digging into what we want to look at, what we're particularly interested in, okay? So, when we come to look at sectors and stocks, we have to start to make a few decisions, okay? Because what we want to do is we want to filter ourselves down to operating in kind of one or two ways. When we start our journey as both traders and investors, we like to think we can be all things to all people, because we are excited, we're enjoying the journey, we're curious, we're eager to learn. But actually, as you progress in your journey, you realize that, the different particular types of operating, engaging with markets, and which ones actually resonate with yourself. So when we're looking at sectors and stocks, we have to sort of, come to some decision about how are we going to make a decision whether to be a buyer or whether to ignore, or whether just to sit in our hands. Will we use something like fundamental analysis to make our investment decisions, or will we use technical analysis to make our investment decisions? So when it comes to long-term investing, many people like to favor fundamental analysis. And if that is your particular style, well, as I said, you'll have access to the research terminal within the MT5 platform that actually helps you with that. Or if, like myself, you prefer to use simple technical analysis to help you make our decisions, well, with that, I'm just using charts, and upon those charts, okay, I always have the same setup. I have a blue 20-period moving average, a red 50-period moving average, a green 200-period moving average, and also the fractal indicator, which I'll show when we switch across to the live chart. So you have to make a decision. There's lots of people, and I would do myself, may actually incorporate elements of both. But generally what you will tend to find is that most of your decisions come from one particular style of analysis over the other. My own view is that lots of people will have quite furious debate in the trading and investing world about which form of analysis is better, fundamental analysis or technical analysis, and that argument will go on for the rest of the days. Okay. Ultimately, my view would be it is whatever works best for you. And each of us are different. Each of us have our own individual biases or individual styles. It is about doing the work to learn which is your better and preferred way of coming to your decisions. For me, I know that actually I like technicals, and whilst I will look at fundamentals, whilst I will look at sentiment, primarily, I like to look at chart to be able to make a decision because it's visual, it's clear to me, and that helps me in terms, as I said, making better decisions. So, be interested to know, of those of you here tonight What has been your own experience? Do you generally tend to make your investment decisions based upon fundamentals, or do you perhaps use technicals? Maybe use sentiment. Maybe use something completely different. Okay, I'm open to every style and way, okay, of engaging with markets. All that really matters is, does it resonate with you, and does it provide you with a good track record over the years? Because ultimately, track record trumps everything. So we just talked about, whether you're prepared to use fundamental or technical analysis. Also want to have a look at, one of the couple of ways, okay, is that we have to make a decision. Are we a long-term trader who is looking to follow momentum, or are we a value investor looking to pick up cheap stocks? There would also be another level. I think Peter mentioned earlier. Many traders, investors might be engaged with stocks because they are looking for dividend growth as a way and a means. But for this evening session, okay, based upon what we're looking at, we're going to be looking at both momentum and value, and understanding how can we just use some of the simple tools we have here, provided to us. How can we use them to make that simple decision of whether this is a particular stock, or maybe even a sector, or maybe an ETF that is of relevance to us and something that we want to add to our watch list. As it says there, the important thing is to know is which one you are before you pull the trigger on your engagement. And if you're new to trading investing, then how do we decide? I recognize that there is a plethora of information and people and resources out there that can provide fantastic insight into stocks, sectors, economies, etc., from both fundamental and technical and sentiment. Okay, that we live in a world where we are not short of the information and data, but sometimes what we are short of is actually the clarity to be able to make a simple decision, namely, am I a buyer, or am I sitting on my hands, or am I moving on? Okay, and actually sometimes making it as simple as possible can be what actually helps, especially new traders and investors, in terms of how they look to operate. So I'm going to share with you just a couple of simple ideas that you might be able to take on board and take away yourselves. In terms of value play, for the purpose of today's session, keeping it nice and simple, I'm going to view stocks that are trading beneath their 200 period moving average as undervalued, and in particular when that occurs on the weekly and the monthly chart. If it is underneath the 200 period moving average, it is likely to be undervalued. That is what sort of sets my train of thought in terms of the process I would be using to recognize that as a value play. It is effectively a cheap stock because the 200 period moving average I'm going to use as an indicator of fair value. And let's have a little look at that. So here is a chart of Rolls-Royce, okay, Rolls-Royce on the London Stock Exchange. Now let me just bring up the drawing tools here, just hopefully help us make it a little bit clearer. As I said, this is it's Rolls-Royce, and it is the monthly chart of Rolls-Royce. So we are going back here almost 15 years, okay, 15 years. Now remember what I was saying is that basically I have a blue 20 period moving average, a red 50, and then a green 200 period moving average. And I'm hoping what you can see here is that we're very often, when we've come down to the 200 period moving average, we've actually bounced, okay, strong bounces in this particular case, a little bit bounced before actually we flipped. Okay, we flipped, and then what actually you can see there is that back in 2020, okay, so during the period of COVID, all right, there was very little requirement for airliners. Nobody was flying anywhere. So if there's no demand for airliners, well, there was no demand for the engines to go on airliners. Okay, and so invariably that impacted the share price hugely. But remember what I was just saying. We can see here. You can see here for a couple of years. Okay, for a couple of years, price actually just was basing. Price was going sideways, and compared to the 200 period moving average, was distinctly undervalued. Okay, distinctly undervalued. So Peter says he bought Rolls-Royce at just over £1 a share. Fantastic. That's fabulous work, Peter. Okay, absolutely fabulous. Well done, you. That's brilliant. It's fabulous to be able to celebrate other people's victories, other people's good trading and investing decisions. Well done, Peter. Absolutely super work there. And as I said here, what we can use is just using that 200 period moving average as a definition of fair value. So when we were here underneath, we were most definitely undervalued. And so investing in the direction of the 200 period moving average would have been a very, very successful play as well. Okay. And this really still has room to go. Where we have there, what's that, around about 610p, okay, £6.10p, whereas a trading here just about, just trading around about just around about £5. So there's about just over a pound, okay, in trend left. But we'll look at that in a moment. But as I said, for the definition of today, just a very simple 200 period moving average. Remember, we're investing long-term trading, so we're only looking to be buyers. So I want to be a buyer when we're, like you can see here, we've stopped being in a downtrend, we're going sideways, and I'm using the 200 period moving as a very simple idea of fair value, and I want to buy in the direction of that. Nice and simple. So very simple opportunity there, simple idea, and well done, Peter. So that's how we're going to define value plays when we look at here today. On the flip side, momentum plays, okay? So for the purpose of today's session, we'll view stocks that are happily trading above their 20 and 50 period moving average as showing momentum, okay? They are in the direction, and in particular for us as long-term only buyers, we are looking that price is above the 20 and 50 period moving average, and it continues to move nicely in a trend. What you can do, okay, is that when price returns to the zone between the 20 and 50 period moving average, that might provide the opportunity to either enter if you've been waiting or to add to an existing position. And one of the ways to do it is to be able to trail stops behind the last down fractal when you are basically investing or being a bullish long-term trader. So here's interestingly, here is a momentum play. So this is the same stock, okay? This is Rolls-Royce, but this is now on the weekly charts. And remember what we were saying, just looking at it on the monthly, how basically price had been going sideways, and the monthly 200 period moving averages is way up here. And actually what we saw was that price got above the moving averages. The 20 was above the 50. For those people who are bang, as I said, once price returns to that sort of 20 and 50 zone, the zone there between the 20 and the 50, that is an opportunity either to enter if you've been waiting to, or to add to your position. And as you can see, the price has moved there quite nicely, and in the standard movement, basically zigzagging up, making higher highs, higher lows. Perhaps you may not be necessarily be able to see it on the quality of the chart here, but the little down applets here they are down fractals, and that is where I would be looking to basically move my stop beneath here, okay? And Bosch, that's where we would be at the moment. Now, of course, we've had a rather, let's say, eventful few days just globally, not just in the UK. But if you have been trading this as a momentum play, okay, price just happily above its 20 and 50 period moving average and actually working its way there in a good trend, that is a good momentum. Hopefully you can see that once we had broken out of kind of just going sideways, the momentum re-emerged and basically has taken us, as you can see, on a very, very nice trend, and something that I hope that Peter has been riding well. So there you go, simple value play, way beneath the 200 period moving average, price already trading above the 20 and 50, well then it's a momentum play and we're looking to just ride with that. So let's have a look at and a thought about one or two the sectors that we have. So in terms of the FTSE, we could look at banking and finance stocks. Historically, within the UK, the services sector and in particular banking and finance have been the mainstay of the UK economy, and also helped massively with the balance of payments. So the question we have to ask is, in this new environment, will that continue? And that is an interesting conversation, because whilst we might see a new government needing to generate funds, generate revenues by increasing taxes, the question has to be said, will they do that to the detriment of the UK banking and finance sector? It might also be said that actually it could be good for the UK banking and finance sector, because we find this new government doesn't really have much in the way of money to work with. They've already sort of identified that there is a 22 billion black hole in the finances, and so the last time the Labour government were in, they came up with a thing called PFI, Private Finance Initiatives, in order to be able to buy aircraft for the military, build new hospitals, etc. And of course, that needs financing. And the UK banking and finance sector will be very glad to provide that financing to the UK government. So in that case, that could be a fantastic opportunity for UK services, professional services, but also the banking and finance. So what we want to see is, well, does that create an opportunity to sort of long-term trade and invest in UK banking and finance, things like Lloyds Bank, Barclays Bank, Standard Chartered, and a couple of others. So let's have a little think about that. That might be something as a sector you might just want to add to your watch list to see whether you can work for it. And this is one I put in. This is an interesting one. This is Lloyds, okay, Lloyds Bank, long-term established UK bank, partly owned by the UK government after what happened in the Great Financial Crash, which was let's just draw it on here. This was around about here. You can probably see that. But what's interesting is that, as I said, we saw price absolutely collapse there, okay, after the financial crisis. And then what we saw was, for many, many years, many years, price just pretty much went sideways in a range. But, just look at that 200 period moving average. Remember what we were saying is that, when we're actually way beneath it, that is an indication that is an undervalued play. And certainly, with that, what we're seeing now is, look at how price is starting to edge up and price has actually come down. The 200 period moving average has actually come down. And now we're at a point where we're going to see what I would term an inflection point. Price is going to make a decision. Either price comes back down to the bottom of the range, in which case we're not particularly interested, or price gets above the 200 period moving average and it switches from being a value play to being a momentum play. As I said, we're at an inflection point there. So as I said, this might just be one particular stock that you just might want to add to your watch list. You might want to see how that plays out over the next particular few weeks and months, because there might be opportunity there. And as I said, the great thing about the long-term trading and the long-term investing is you don't need to be sat there all day, every day. Okay, you don't need to be sat watching every tick on the chart. You're in a position to do your analysis, create a plan, okay, and execute it when you need to. So think about that. Another sector we might want to have a look at is UK house builders. All right, why would we be interested in that? Well, the new government has committed to building 1.5 million new homes in the next 5 years. Okay, as I said, they've only been in power for a month, but that is one of the elements they've come out, committing to build 1.5 million new homes in the next 5 years. So effectively around about 300,000 homes a year. That does sound impressive. What might be said, and just from my own experiences, is that realistically, the UK only makes about enough bricks for about 200,000 homes a year, and has generally tended to not really build anything above 150 to 200,000 for the last 50, 60 years. Okay, there's been the odd blip, but generally that's it. So it is a very ambitious target that they have set themselves. And the question becomes, well, do they have the will? Do they have the power to actually make that happen? So then you start to look at, well, maybe we want to have a look at some of the UK house building stocks. So things like Persimmon, Taylor Wimpey, Barratt Developments, okay, and Redrow. Now, what is actually going on is that Redrow were a large house, but they have been bought by Barratt Developments. I think Taylor Wimpey were the biggest house builders in the UK, but that will change with the purchase of Redrow by Barratt Developments. If you want to read more, as I said, there are some fantastic articles, okay, on the Admiral Markets website, so one we wrote on house builder shares. But I just want to think is there the opportunity now with this new government that invariably they will be committed to that ambitious building target, and that actually means more opportunity for those UK house builders. As I said, this might be a sector you may wish to add to your own particular watch list. If we look at here, Persimmon, okay, Persimmon. This is Persimmon on the monthly chart, okay, on the monthly chart. And what I find fascinating is that, remember what we were saying is that this is the 200 period moving average here, and for having price collapsed, okay, there just over a couple of years ago, price has basically been trading underneath the 200 period moving average. So it was a value play. But what I'm seeing now, and this is just classical technical analysis as well, is that I'm seeing we've created an inverse head and shoulders there. Now, when you look at an inverse head and shoulders as a classic technical analysis pattern, you'd also be looking for a neckline. And weirdly, we are seeing the 200 period moving average almost act as a perfect neckline for this. What we've also seen is the 20 period moving average turned, okay, from being resistance to being support. And last month, we basically closed above the 200 period moving average, something we've not really done for, 2 years. So this has been a value play. This is how I've been looking at this as a value play. But now I'm interested to see, is this now turning into a momentum play? Is this now going to turn into a momentum play and be a demonstration of strength within its share price, based upon the fact that the new UK government is going to, as I said, have that ambitious house building target. So I think this is a great chart to look at. It's maybe one you want to add to your watch list just to see how this particularly develops. So looked at house builders, okay, we looked at banking and finance. How about construction? What might be of interest to people who may not have known is that actually we had the PMI data out this week, and Britain's construction sector experienced its fastest growth rate in more than 2 years, which once again sounds a little bit impressive. Once again, we're thinking, does that create an opportunity for us to trade and invest UK construction companies? That's what we're looking at, isn't it? So one of them is Kia, the Kia Group, KIE as their ticker. Now, this is the weekly chart, okay? This is the weekly chart of the Kia Group. And based upon what we were talking, I'd hope you'd be able to see that this is has been quite a clear momentum play for the last 2 years, okay? The last 18 months, really. Having here we go, get the old drawing tool here, having reversed our downtrend. Remember, we're long-term trading investing. We're not interested, okay, in shorting. What we're interested in is how can we, how can we buy stocks either for a long-term trade or for much longer-term investing. And what we have here on the weekly chart is the 20 crosses above the 50, and we have price above the 20, it's above the 50. And actually what happens is price beautifully works its way up and above the weekly 200. And also, as you can see, that creates a great deal of bullish flag patterns there. Now, very often people like to maybe poo-poo or make fun of classical patterns. But what you will find is that actually on the weekly charts, the monthly charts, when we see these classical patterns build up, they actually work very, very well there. And I would suggest that the Kia Group has been a really good weekly momentum play, and its return, every time it is returned to the 20 to 50 zone, based upon it producing bull flags, has actually also provided opportunities either to enter for the first time or to add to your position. What I'll be interested to see is, as I said, does that continue? Remember, we've had a couple of interesting day in markets, but I think it's fair to say we have been in a clear market, and I'll be interested to see does that continue based upon the growth within the construction sector. So we've looked at banking and finance, we've looked at house builders, we've looked at construction. What about defence companies? Why would we even look at defence companies? Well, recently, just before the election, the chief of the British Army came out and he recently stated that the UK needed to be ready to fight a major war within 3 years. The question for us, does that create an opportunity to trade and invest in UK defence companies? Now, there is also a further conversation here about whether that actually fits in with your own ethical or moral stance on defence companies, on investing in general. And that's an interesting conversation that you need to have with yourself to understand. But for those of you who are happy to invest in good companies doing good work, well then it's an opportunity to look at some of these UK defence companies. Will there be an increase in UK defence spending if the West is getting ready for possible future conflict in the next few years? Certainly we have access to British Aerospace, Kinetic, Rolls-Royce, which we've already looked at, Chemring as well, who are a company that provide defence, actually sort of defence subsystems for vehicles and aircraft. So this is actually a chart of British Aerospace. This is the weekly chart, okay? And I would hope that based upon what we talked about earlier is that you can see that this has been a weekly momentum play, okay? This has been an interesting one, and what I'm going to sort of draw on here, this is February 2022. Price had been in a little bit of uptrend, but that uptrend accelerated from here due to some of the events going on in Eastern Europe. But as you can see, that basically that has been quite a strong trend, hasn't it? Quite a strong trend. And remember what we were talking about is every time it comes back to that zone between the sort of 20 and 50, okay, that provides an opportunity to either enter a position or add to your position. So remember, this is what I was just saying. Either value play where price is way below the 200 period moving average, giving us undervalue, or we are already in a trend, we already have momentum taking us forward, and we want to find a way to engage with that. So, in conclusion, ladies and gentlemen, okay, change of government on the 5th of July after 14 years of Tory rule is going to mean changes within government policy and also within the economy and also within the stock market. And those changes may offer new opportunities for UK stock traders. But it's important to know beforehand, okay, is this a value play where price is trading way below the 200 period moving average on the weekly and in particular the monthly? Or is it a momentum play where we are already starting to get into a trend, momentum is behind it, and price is happily trading above the 20 and 50 period moving average? As I said, there are a multitude of ways, okay, to both long-term trade and invest. What I've just tried to share is just two very, very simple, very clear ways that you can use that to long-term trade and invest in UK stocks and shares. As always, good risk management is always required, and the Admiral's Research Terminal can help. Now, we've overrun just a little bit, but I was just because I wanted to share as much as I could, but we are going to have time just to have a quick look at the Admiral's Research Terminal and also some of the charts on the MT5 platform. However, before we do that, just a reminder to don't forget to join us next time. So at the same time, okay, 7 o'clock London time, London evening, Wednesday, 21st of August. Once again, join me to understand trading news events, okay? How does a trader do it? So we'll talk about what are the main news events that traders like to focus on? What does a trader need to know before trading news events? And how could you trade news events with Admiral Markets? So as I said, 7 o'clock London time, Wednesday, 21st of August. Check your inbox for the webinar link or go onto the website and make sure that you sign up. And I hope that you will join us for that. And as always, if you've got any questions, you can contact UK Admiral Markets. You see the email there, uk@admiralmarkets.com, or the telephone numbers there, or you can actually follow us on the YouTube channel.